Hey everyone, welcome back to Corporate Decoder. Today, First Financial Bankshares Incorporated filing just filed their current report on the 16th of July 2026, and I am seeing some interesting movement in their financials. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is reporting its quarterly results. And while they are beating expectations, there is a slight dip that might catch your eye. This filing is for First Financial Bankshares Incorporated, a regional bank based in Texas. They are publicly traded on the Nasdaq under the ticker FFIN. Looking at the news, they've been highlighted as a top dividend stock, and their second quarter earnings for 2026 seem to have just edged past what analysts were expecting. Some reports are saying they have over $12 billion in assets. Large institutional investors like BlackRock and Vanguard hold significant stakes in the company, which usually signals some level of confidence from the big players. So, what is the big news in this filing? Well, it is primarily an earnings release for the quarter that ended on the 30th of June 2026. Companies like this put out these reports to tell investors how they are doing financially. It's like a checkup for the business. Now, this filing essentially points us to an attached press release which contains the juicy details of their financial performance. Unfortunately, the actual numbers from the earnings release aren't directly embedded in this specific document, so we have to rely on what is being summarized. However, the key takeaway from the headlines and the nature of this filing is that First Financial Bankshares is announcing their second quarter results for 2026. The fact that this is a Form 8K filing, specifically under Item 2.02, means they are reporting a material event, which in this case is their results of operations and financial condition. Investors and analysts will be poring over these numbers to see how the bank is performing against its peers and its own historical trends. Given the positive news headlines about beating estimates, it suggests that at least on the surface, the bank had a decent quarter. However, we also see a report from the 17th of July saying the stock was down 3.3%. This kind of divergence can happen. Sometimes the market reacts to nuances not immediately apparent or to broader market sentiment. What is always important to understand with bank earnings is not just the headline numbers like profit, but also the underlying health of their loan portfolio, their net interest margin, and their efficiency ratios. For a regional bank like First Financial, factors like interest rate changes, local economic conditions, and the competitive landscape are crucial. Let us think about a comparable situation. Back in 2021, some smaller banks experienced challenges due to shifting economic conditions. And while First Financial seems to be navigating the current environment reasonably well, any dip in stock price after an earnings report is worth noting. It could signal that investors are looking for more than just meeting expectations, or that there are subtle warnings within the details of the report. The company's common stock is traded on the Nasdaq Global Select Market, which is a pretty reputable exchange. Their ticker symbol is FFIN. This means that whenever they release important news like these quarterly earnings, it can have a direct and immediate impact on their stock price. A lot of eyes will be on how this news is digested by the market in the coming days. Looking at the broader context, financial institutions are often seen as bellwethers for the economy. When banks are doing well, it often suggests a relatively stable or growing economy. Conversely, challenges for banks can sometimes precede wider economic slowdowns. For First Financial Bankshares, being a regional bank means they are particularly sensitive to the economic health of Texas and the surrounding areas where they operate. The filing also mentions that they are not an emerging growth company, which means they are subject to all the standard reporting requirements and do not have the extended transition periods for new accounting standards that smaller companies might have. This indicates a certain level of maturity and compliance for the organization. The report is signed by David W. Bailey, the President and Chief Executive Officer, and dated the 17th of July 2026. This date is significant because it is one day after the reported earnings date of the 16th of July 2026, which is typical. The signatures and dates confirm the official filing and attestation of the information contained within the report. In terms of the story here, it really centers around how First Financial Bankshares is performing in the current economic climate of mid-2026. The headlines suggest they are performing well enough to beat expectations, which is a positive signal. However, the immediate stock reaction suggests there might be more to the story, or that the market is taking a cautious approach. Without the full earnings release here, it is hard to pinpoint the exact reason for any investor apprehension, but it's common for a subtle miss in a less reported metric or a slightly cautious outlook for the next quarter to cause a stock price reaction, even when the main earnings per S-hair number is good. Now, looking at these results more broadly, First Financial Bankshares appears to be in a stable position, reporting solid earnings for the quarter. The fact that they are a dividend-paying stock and attract institutional ownership is generally a good sign of financial stability and investor confidence. The key opportunity for them lies in continuing to grow their asset base and manage their loan portfolio effectively in what can be a fluctuating interest rate environment. The risk I am watching is whether the slight dip in stock price after reporting positive earnings is an isolated event or a foreshadowing of underlying concerns that might emerge in subsequent filings. What I'm actually looking for is a deeper dive into the details of their net interest income and any potential increases in non-performing loans in the full earnings release to get a clearer picture of their operational health. All and the research tools I actually use are linked in the description. They help keep this channel going, that is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. You can also join our Discord, link in the description.